Hi everybody, and welcome along to Mint Monthly Update for the month of June that was. You've got myself, David Fyfe, and fellow portfolio manager John Middleton here today to talk through the month. Just flying through the disclaimer. It's been an interesting month, but obviously the key topic du jour was really around the OCR and what the central bank is going to do around rates. Now, in our view, with the hike that occurred, obviously a bit of a dovish hike, as it's often described, on the back of, I guess, a bit of a weak economy at the moment, on the back of a few different things, including obviously some inflation pressures from Iran. But in our view, a hike was more likely outcome, given A, it was already priced in by the market. But B, again, where the OCR was already sitting was towards a slightly stimulative level. And then obviously, as we see the economy recovering, hopefully towards the end of this year, being in a more central, more neutral stance on rates feels a sensible place to be, given the inflation pre-Iran and obviously coming out. I was sitting at the top end of the band, so one we're keeping an eye on. The real interesting piece was heading into it. We did see a lot of the, the retail banks suddenly move to an expectation of no hikes or minimal hikes from here. And as you can see on the chart, we certainly, the views from here are a bit spread. I guess what the market's pricing is at the lower end, but you're certainly seeing some views that we could see another 3-4 hikes in the next 12 months or so. But in our view, we sort of are of view that maybe we get one more, and certainly with the election coming later this year, we're likely to see a pause and a maybe a bit of sit and wait around, I guess, both where GDP lands in the economy, which obviously we had a reasonably good print in the last update for March quarter, but June will be a more challenging one, I'm sure, and then also where CPI lands now. In some parts we've still got some potential embedded inflation from the fuel hikes we saw, but in other areas such as rent, etc., which we've talked about in the past, there is some sort of easing occurring. So it's going to be interesting to see where that lands from there. But in terms of the domestic market itself, obviously quite a positive month for the New Zealand market. In fact, ended up being up over 5.5 for the quarter now. So, it's been a challenging market for the NZX 50 in the last few years, but it's good to see pretty strong and better outcome in the last few months. And I guess what drove this for this quarter, clearly there's some quite big swings. And one of the largest, of course, was around A2, which saw a high double-digit return, driven by a few different factors. One being, of course, that it had a more challenging period with a recall of product in the US, which sort of triggered fear across that they might play into China. And of course, we did see some rhetoric around that within China, but also there's been some supply issues around getting the China label, their approved product within China. And those double impacts we thought might hurt earnings pretty significantly. And to be fair, that has been seen across some of the data. And then looking at the chart on the page there, you can sort of see month to month, it has been rather volatile recently, but one that we've kept a close eye on. But I guess one of the reasons we did see a better outcome in the month was really around the fact that we didn't see any further downgrades from the company on the back of these conversations as well. But also we did actually see the approval from SAMR, which is the Chinese regulator, around the facilities in Pocono that A2 had recently bought in the last while. And with this came the announcement that a special dividend of 300 million NZD was coming to market. And I guess that has a few different impacts. Obviously great for existing shareholders, but also additionally meant that a few of the players that are short the stock were very much covering that as quick as they could. So we did see a bit of support in the stock as well. So it's not all green from here for the name. There's still some challenges out there, and we are looking at where it goes in terms of the next few months in terms of infant formula, both I guess China wide, but also within the company itself. But it is looking a little bit better than it was a while ago, and certainly the share price is reflecting that. And a few other names, we saw some strong performers in Somerset, bouncing from its sort of weaker periods earlier, partly on the stronger GDP front being helpful, and also views around where rates might head. And also similarly, we did see a nice bounce back in EBOS as another name. One of the names we have held in the fund for some time had a nice bounce, which was THL. Did see a competitive second bid come in this month as well from what supposedly may be, it was unnamed, but the guesswork out there is that it might be one of its competitors offshore, so that would certainly be helpful. And I guess we now sit and wait as the original bidders, BGH, now doing DD, but I may see a higher bid come out of market. So we're keeping a close eye on, but it's certainly been helpful. The stock was up 10% over the month as well from there. In terms of names in the fund, we have done a little bit of work around adding Mercury to the fund. In terms of the gentailers, we've seen a bit of a move around in a strong period in the last quarter. So we've taken that opportunity to trim a bit of Meridian and add to some Mercury. And as noted earlier, A2 had a strong period, and we'd actually closed up what had been a bit of an underweight to a small overweight now. And again, that's been reasonably helpful over the period. I'll now pass over to John to talk about the Trans-Tasman Fund.
Yeah, thank you, Dave. Again, just echoing Dave's comments, decent sort of period for the market and the fund as well. Dave's pretty much covered off most of the Kiwi side of things, and to be honest, the Australasian fund echoed a lot of Dave's comments. So I'll just focus really on the Aussie names this month. And again, there were a number of strong performance across the fund. Telex we've talked about a little bit, but again, renewed confidence in what they're doing. A couple of milestones met, and basically signs that a few of the products that have been delayed are now coming to market and demonstrating, good growth as was expected, albeit a little bit later. SRG Global, again, we've talked about as well, up 27%. If you look on the right, this is a sort of an extract from the announcement on the 2nd of June, where once again they upgraded earnings guidance for the year, gave us earnings guidance for next year, and highlighted a myriad of different contracts that they've picked up over recent months, which supports longer term growth. Just giving a bit of context to that, this is a business which in a year ahead will probably deliver about 1.6 billion of revenue. A lot of that revenue is continuing. I mean, again, it's infrastructure support, etc., etc. So to pick up 1.85 billion of new work, certainly supports the next couple of years of growth. And when you dig into what the 164 million to 168 million of FY26 EBITDA means, basically that's 30% growth year on year, and the outlook going forward is for a further 17% growth in the year ahead. So pretty punchy stuff, pretty encouraging. And again, the thing I flag here is it's across a whole range of different contracts. We've talked about some of the water contracts, essentially looking at water up in Queensland and water cleaning facilities, but also, energy, industrial resources, a whole host of different contracts. So just a business which is being run pretty well and continuing to deliver. And again, I would flag that I think, guidance at the beginning of the year starts pretty conservative. So hopefully scope to upgrade those numbers still. I would flag in passing that another stock that we added to the fund, Southern Cross Electrical, had a similar update in the quarter. And again, these are companies with junior ends just updating the market ahead of the period close. But Southern Cross Electrical also picked up a lot of diversified contracting work, but in particular, they are essentially electricians that do the fit outs of data centers. And again, because of that strong growth in data center build, their business or their revenue in that area of the business is looking to triple in the year ahead. And that was really what drove the upgrade there. And finally, in terms of the Australasian names, I just flag Amcor. Again, had a nice little bounce. But basically, this is a plastic packaging company, uses a lot of resin, which is an oil-derived polymer, essentially. And obviously, with the spike in the oil price, it got sold off on concerns that, clearly their cost to generate the product would go up. So a little bit of oil price decline at the end of the month helped it. I would flag here, though, that essentially contractually you pass through the resin price to a customer on a 1 to 3 month lag, and probably 1 to 2 months in reality. And so, notwithstanding a little bit of a reef rally, we do think that the risk of margin compression on the back of higher raw material prices is pretty much minimal. And again, I think when we start looking at growth going forward, it looks okay. Certainly looking at the World Cup and the people in the stands in the US, it feels like the US consumer is reasonably robust, and selling a whole range of different consumer products or packaging those consumer products, and Amcor should have felt the benefit of that. Looking at the fund, again, echoing Dave's comments, we did add to a little bit of A2. We continue to build our Southern Cross position, and actually we took a little bit of profit in the likes of Infratil and SRG Global to fund that. Again, solid period for the fund. Switching across to the property sector, and again, cognizant of the fact that we got property earnings last month, but again, a decent performance for the property fund. Again, most names were up during the period, in particular because of ongoing volatility. You know, the property sector remains a safe haven, albeit with an attractive yield that isn't growing much. Within the fund, again, the only real stock that was a laggard was Winton, and they had a bit of company-specific news. Bad news in the sense that their CEO and chairman, Chris Meehan, has decided to leave the business for health reasons, which sort of leaves that business largely rudderless. And again, obviously, the share prices were sold off on the back of that. Elsewhere, again, a good performance from Charter Hall. Really there, it's interesting, having put a couple of rate increases through, the hope is that we are towards the end of the rate hiking cycle, and hence a rate sensitive name such as Charter Hall benefits from that, and had a little bounce towards the back end of the month. And again, you know, we haven't really talked about it in detail, but we will talk about it in the quarterly. These tax changes in Australia, if you are essentially penalising direct asset ownership, albeit with a few caveats, you know, potentially that forces investors into funds if they want to get access exposure to direct property. And again, Charter Hall is a mechanism of doing that. Dave's mentioned Somerset, which also had a nice little bounce, having been under pressure for the last couple of months. And then the final stock on the property side of things I mentioned was Precinct. Again, an announcement from them that they are selling 50% of the PwC Tower at a small discount to book, but basically valuing the PwC building at about 600 million. And that should leave them well capitalised to, at some stage, start the demolition and then rebuild of the downtown car park, probably coming towards the end of the year. But again, you know, will create another premium office, mixed office use asset by the waterfront, which is probably good news for Precinct medium term. Clearly, you know, the risk of actually building it, we'd prefer to be on the other side of it, but you know, it will be a good asset, and I think has already got quite a lot of interest. So that is essentially the month that was June. Any questions, please give us a call or drop us an email at info@mintasset.co.nz. We appreciate your support and look forward to talking to you in a month's time. Thanks.